morning. This is Hap May with the Legal Play.
And I'm Chelsea El-Azzi, Hap's associate. Hap,
Yes.
how do you know if you're being audited?
And by audited, you mean audited by the Revenue Service?
By the IRS. Now that I am working in tax law, I get a lot of my friends and family come to me with their tax questions. And sometimes I actually
have more friends when you have to about this time of year, bro.
Right. A lot of the times I'm like, you need to talk to a wealth management, professional. That's not exactly a tax question. But in this case, someone did come to me and actually asked me, how do I know if I'm being audited by the IRS? Am I going to get a letter in the mail that says, from the Treasury Department, congratulations, you're being audited?
Yeah, that's not the exact language they use, but yeah, you generally speaking, it starts with some sort of notice.
Mm-hmm.
Now, a lot of people may have moved, haven't filed a tax return since then, hasn't notified the IRS, and so sometimes it takes a while for that letter to filter down in the process. Sometimes it gets missed in the process.
And here's the thing: is not getting a notification, not getting notice from the IRS is not an excuse in their eyes. Like I feel like every time I've called them, if the address on file is not updated, that's on the taxpayer.
That is generally true.
Just because your address isn't up to date and you didn't get the notice is not an excuse to say, well, I didn't know. You didn't know, I didn't get that letter in the mail, years ago. And so all these penalties and interest that have accrued, I shouldn't be responsible for paying.
Well, and there is an audit reconsideration process. And there's also judicial remedies that could be if you just happen to get, assessed through whatever means, through an audit or whatever means that there is, without you actually finding out about it.
So let's say the address they have for you is correct.
Right.
You'll get some kind of notification in the mail.
Yes.
That it usually says something to the effect of like your account's under review or.
There are the accounts under review. There's an actual audit notice itself, and also
will it have the word audit? Will it actually say you're being audited?
It used to. I'm not sure what it says it, but your audit has been selected for audit or review.
Okay.
Say something to that effect.
Okay.
Yes. In the process, and typically, most of the time now, most people will get notices that aren't a full scope audit, but the IRS gets a 1099 that says a bank gave you some interest. They don't see that on your tax return when they try to do their match, and they send you a notice that says here are 5 items that we don't see on your tax return, and I'm proposing an adjustment, usually adding income to your, and then you can respond to it. Oh, I missed it, in which case you just submit to it, or no, it's included here. I had a case, recently where taxpayer sold her house. And there is a special kind of 1099 that gets reported showing the total gross proceeds of the sale of the house. And the IRS picked up on that. She moved. Obviously, she moved. She sold her house and moved. In fact, moved out of the country, moved to England, where she's originally from. And she starts getting these assessments from the IRS. And they had sent the notice. She never got it. They had made the assessment as if she sold her house, had paid nothing for her house, and included it all. Which is what the problem you get into is the fact that if they get this information, they try to either be through an audit or through a notice or whatever that try to figure out, get you to answer. You don't answer. They just didn't assume it's income, and there's nothing to offset the income, no expense or cost to offset the income. They will just add it, give you an assessment, and expect you to start to pay. Fortunately, we caught hers early enough. They had proposed an assessment. We sent a response saying, one, no, yes, she sold her house, but she had paid so much for her house. In addition to that, since it was her primary residence and met the 3 out of 5 year test, the first $250,000, since she was single at the time, would not be included in income. And eventually, the IRS, although it took them a long time to respond, but eventually they responded and said, okay, you're right. You don't owe anything. And she'd also missed a couple of 1099s for a couple $100 with a bank interest, which we
So in that case, though, that's not being audited. That's just the IRS kind of saying, we're gonna try to fix things on the back end as we see.
which is largely what the IRS is doing. And then it's not a full scope audit. They just send out notices that says we're looking at these particular items.
And that they themselves may just make the correction on their end. And if you disagree with it, you need to take some action.
Correct.
But again, back to my original question, how do you know if you're being audited? And when you're being audited, what does that process look like? Like if when you get the notification in the mail, you're being audited.
Okay.
Is the IRS gonna immediately jump to like start like seizing bank accounts and
no, that there has to be an assessment. You know, there's an audit function that says we are going to audit you, review you, see if there's an adjustment, make a proposed adjustment, and go through that process. Not that you agree to it or don't. And then we either, the guy makes the assessments, you have a chance to litigate, maybe you do, maybe you don't, but at the end of the day, there is a determination that you owe this. After that, they turn it over to the collection department, who then will go through the process of, giving you notices, giving you opportunity to voluntarily pay, and then if not, starting to do things like put liens and levies, ultimately seize bank accounts and other things in the process.
At what point in that process, though, must you start turning over like bank account information?
That is
usually
the audit. I mean, when they come in, they give you a notice they're going to audit. And traditionally they actually did this. They came out to your house or to your business and stuff like that. A lot of times,
let's see your receipts.
A lot of times now they're bringing people in or during COVID era. I mean, just they send the stuff via not having face-to-face meetings and stuff like that. And a lot of what they do now are like computer type analysis rather than a full scope audit. But when they get down to do a full scope audit, they do a full scope audit for a couple of reasons. One, they think based upon what was reported in your name and what was reported on the tax return, there's a mismatch. There's also a random function in the fact that they just take so many people at random. That this is then also an audit that they have to develop statistics. So they will take a sample of people and develop statistics as to what reporting compliance is, what type of items there are, so that they can build their data bank, so they can build their algorithms, what we call it today, as to how to figure out who to audit, what to audit, what to look for in the process.
How long after you file your tax return can you expect an audit if it's going to happen? Like, does the IRS have some kind of time period that they have to audit if they're going to?
There is a 3-year period after you file it, for which most items, would be statute barred. Fraud not being one that there's never a statute of limitation if you committed fraud on it. But if you just made a mistake, had a bad calculation, that wasn't fraudulent, generally speaking, there's a 3-year period. There's also a 6-year period if it had you underreport somehow 25% of your income, then there's a 6-year period.
But they have to find fraud, or they have to prove that percentage to extend the period.
So generally speaking, most audits would take place in 3 years. And if you get past the 3 years, 3 years from the point in time you file the tax return, not the year but when you file the tax return. Then
that's a long time to wait. I mean, because today is April 15th. I'm intentionally like bringing up this topic because today is April 15th, which is one of the large tax filing deadlines for individuals. And I mean, I've had this question asked to me recently. How do I know if I'm being audited? And I imagine the next question is, well, okay, once I file my taxes, if I'm worried there might be an audit, like, I think I'm in the right, I think I've got everything squared away, but the IRS might disagree. How long am I going to have to wait before I get notice that, I've now been flagged for review?
Typically, although there's no magic rule about this, the IRS, the staffing flows and their attentions to audits and versus other functions shift from time to time. Generally speaking, about 18 months after you file your tax return, you would it is the kind of the ripe time to have
18 months.
Yeah, it takes the IRS a while to process them and get the whole bulk in there, and then figure out how they're going to what returns they're going to audit and the like. I mean, if
The-
you've been audited before, you're more likely to get audited. If you have a lot of income,
What's a lot? What qualifies as a
well,
lot?
that's I don't want to give too much in that, but I mean, if you have a lot of income and a lot of deductions, you're more likely to, if you file a Schedule C, you're more likely to get audited.
Okay.
If your income varies significantly from year to year, for no
So
real
there's some
reason.
triggers, there's some flags,
There
there's
are
some
some
like
things,
red
just
flags.
make it more likely that you would get audited if
Okay,
you're taking an aggressive position. So
okay.
this receipt I have is not taxable, or this item I paid for is not deductible. If it's gray as to where it was,
Okay.
this is the kind of thing you need to be worried about an audit, and you would be looking at that clock, that clock or that calendar as it gets close to 3 years. In the process, I have clients that, sort of every April 15th, when that 3 years from that 3 years from goes, that they say, oh, good, I didn't get audited,
Okay.
with regard to that.
Well, so another question too is if you're using one of these software programs, I know TurboTax always gives that kind of notification. Other maybe I don't know if CPA firms or other ones like offer this, but I definitely know certain software programs offer this audit protection. Oh, use us, and then you can click the box, check the box, and pay a little bit of money, and it's audit protection. What does that even mean?
Basically, it means that if you get audited, there's somebody going to represent you. It doesn't mean you're going to win the audit in the process.
Except if they're going to represent you, doesn't that mean you have to pay them more money to put in the time and effort?
I'm not sure how all of those programs work, but generally speaking, that's the idea. You pay a little extra, and that pays for your representation through the audit process. So they may say, I don't know what the number is, but they get $50 from everybody that checks that box. And there are 1,000 people that check that box, and 20 people get audited. It's sort of an insurance type,
Okay.
arrangement or something like that.
Okay.
And I'm sure that doesn't include, going to tax court, or anything like it's just representation. When the IRS auditor comes out there and says, "Show me your receipts,"
in that case,
show me your
though,
bank statements.
I mean, the information that these programs provide, though, is only as good as the information you give them. So how effectively can they represent you if you're the one providing them with the numbers and
if they've asked the right questions, asked for the right information, and you've given them that, but withheld something either intentionally or you just didn't realize that was going on, they could be fairly effective because they've at least made sure that as they were filing the tax return, they got the kind of information that was needed in order to show an auditor.
can they get, I mean, can the IRS and these revenue officers get past that representative to try to pierce, even further and get more of what they're looking for?
You have the right to, the representative can't withhold information. I mean, you can, some information they can withhold, some they can't, but that's that just basically, allows you to have some knowledgeable tax person know what needs to be produced, know how to organize it, know how to talk to the agent, know how to the auditor, know how to deal with the auditor so that it can be a 2-hour audit as opposed to a 2-month audit where they're going back and forth asking for a whole bunch of stuff. And taxpayer doesn't doesn't keep the records, doesn't exactly know what the IRS auditor is looking for,
or in some cases offer more than they need
something
to
more than they
answer it, embellish a question,
answer the unanswered question. That's yes.
Which is why we're here to be the go-between.
Yes. Yeah, that's true. Yes.
Let us relay the information.
And frankly, I don't like my clients talking directly to the IRS because they might say too much or say something that's wrong and they have to go and if the IRS agent asks me, did your client have any additional income from some side gig. I can say, I don't think so. I don't know. Let me check.
Mhm.
If that question, and then we can get back in formula. And the guy says, well, I mean, I had a garage sale and I sold all my socks, when somehow that didn't make it in my tax return. Then I can figure out how to deal with that rather than having him talk to the agents. So yeah, I sold my socks and made a bunch of money. Didn't tell you about it. So we figure out how to do that in the process.
It's
So
usually more than socks, folks.
that's I'm trying to make a tame example of it, but nonetheless, that's something I like to coordinate, figure out what my answer is rather than have my client answer it directly. I'm also reminded of the story of the client who called his lawyer and says, well, the FBI came by this morning, and the lawyer starts to get nervous, and the client says, well, don't worry about it. I explained everything to him. So you try to avoid that. I mean, the IRS is not quite the level of the FBI, but they're a powerful government agency, and it's good to have somebody uh, as an intermediary, who knows what to tell them, what not to tell them, what to make available, how to give them what they need and get them out the door.
Yeah. Yeah. Okay.
And I mean, if you get audited, if you owe something, sometimes the question is, okay, how much am I going to owe? Because I did make some mistakes, and there's so if there is something, so I just missed that, and I mean, and there's no defense, for it, just I mean, it's better to admit it up front in the process than it is to try to hide it in the process.
Okay. Good stuff. Good stuff.
All right,
All right. Thanks for your time, Hap.
certainly, and this is Half May with a Legal Play.